I mean, the index has now been hovering around that 14, 15 level for most of the year. Is it normal to have such a long period of steady confidence after coming out of a recession?
Most unusual. It is the level, which is very high. If we exclude the last upswing, the prosperity wave of 2007, these confidence levels are equivalent of consumer peaks in the previous business cycles going back decades. And instead of this then being a peak, no, this is an early level that we reach, and it has been there for 12 months. So this is remarkably high, remarkably long, very steady.
And of course, you do point out in the commentary that the long-term average for the index is a reading of +2. So positive 14, 15, why have we bounced back so quickly from the recession?
Well, it was as if the recession basically never happened for some people. I think the news reporting has focused very strongly on what went wrong and who suffered in that period. But there have also been people who were not ultimately that affected, at least not according to these numbers. And especially also their own finance readings are even higher, indicative that a majority, a sizable majority of people, and historically a very large majority of urban consumers, are indicating that they are not actually experiencing the kind of strains that have been so much talked about. So the pain in the system, I think, is very focused in that respect.
Just taking a look at the questions that you do ask, and you mentioned one of those, that's your own financial position. Another one is for the economic performance over the next 12 months. And the third one is your ability at present, or your desirability at present, to buy durable goods. How did those responses get met across the different income groups?
Well, specifically, own finances remained very high and stable. Across the groups, people downgraded their view of the economy by a few points. But in nearly all instances, they upgraded whether now is the time to buy durable goods, and in some instances quite considerably. So from a personal point of view, many consumers consider now is in fact a better time to buy durables. And I think that is on the back also then of their very stable own financial outlook. At the same time, I think they're realistic in terms of the news reporting that the economy is somewhat slower performing, and people are reflecting that in a lower rating for the economic outlook.
Of course, we have had 600 basis point cuts of interest rates in the current cycle, and there is expectations that we could have another one. Do you think that's adding to the desirability to buy durable goods at this stage?
Most definitely, and especially in the higher income groups. Especially people earning over 5,000 Rand monthly are giving a very strong signal in this respect.
Of course, jobs have been lost, and I think continue to be lost across sectors, particularly the manufacturing sector. Does that come through at all, perhaps in the lower income groups?
It will come through wherever these losses are being incurred, but it may be more pronounced in the low income category, which is 2,000 Rand income or less. And there, in fact, we found people saying no, they downgraded the time to buy durables, and they slightly dropped their confidence levels, in contrast to the very high income level of over 10,000 monthly, which have gone the other way.
Well, I mentioned the interest rates. We've also had wage increases beyond inflation at the moment across quite a number of sectors. Is that also perhaps added to disposable income, that people can afford to go out and buy big ticket items?
I think this merely confirms the statistical side of things. Disposable income growing at 10%, interest rates down, asset markets like the stock market up. People are better off, and they're reflecting it in these high confidence numbers when it comes to their own finance, and the way they're upgrading. Now is the time to buy durables.
Well, what's your view? Do you think we're going to get another interest rate cut on Thursday? Do you think we need another one? Do you think it's going to make a difference to surveys like this?
In terms of the state of the economy, we may have another one. In terms of the actual performance of inflation and the outlook for inflation, I would say we're now on neutral. The markets were very, very firm in forecasting another rate cut over the last couple of months. Over the last few days, they have reduced that probability somewhat, where previously they were saying 100% probability by at least January of another 0.5% cut. They were down to about 80% certainty. That is still a very high number. So the market is assuming a cut either this week or otherwise in January.
And your gut feel, should we have one?
In terms of what have you said, yes.
Property prices, though, so you also mentioned in the commentary we've had the stock market making quite nice gains this year, particularly in the third quarter, which is probably when you were out doing this survey. Property prices under pressure. I think FNB itself believes property prices could decrease next year, and that's really the personal wealth effect as well, isn't it?
Yes, and for many people the house is the primary wealth asset. So in that respect, from an asset point of view, the housing situation probably weighs negatively on people's expectations, and one should bear that in mind.
What do you see as the risks to the recovery we're seeing in South Africa, and particularly the recovery to confidence we're seeing among consumers?
The main risk is for me that fixed investment is taking a long time recovering. That applies to the public sector, but also in the private sector. And we have the constraints that are being mentioned daily, the electricity constraint, the credit constraint in the residential housing market, the strong rand, at least for certain types of exporters. These things are all weighing on the export performance. Personally, I don't think internationally there are too many things that necessarily could go wrong for us, despite all the stories about Ireland and places like that. I think the international picture remains fairly coherent in continuing to support us by way of capital flows and by way of commodity prices and commodity demand. So if there is underperformance, one has to look for it domestically.
And do you think we can maintain confidence at these levels, or do you think we will start to see it putting back a little?
No, I would expect higher levels of confidence. The business cycle upswing is very young, and we have a long way to go. So we have not, I think, reached the ultimate high levels that are achievable.